Well, good evening, ladies and gentlemen, and thank you for being with me this evening. And it is Thanksgiving Day. Thank you, David. You're right on it. Glad to hear that you can hear me all right and see the projection. Now, I do apologize for the projection. This happened 2 weeks ago with a new computer that had different settings on it, so you can see not only the main screen, but the next screen that's coming up. I do apologize for that. It should have been fixed, and it will be fixed. But it's also meant that your main picture's a bit smaller than normal, which may be difficult. But we'll do the best we can. Happy Thanksgiving to all our friends in America. Most of you will be watching this on the video replay, which will be posted on Sunday. Terry's traveling at the moment, so it won't be posted this evening, or unlikely tomorrow morning. It could be as late as Sunday. What we're showing you today is a very famous painting, and it's actually called Scotland Forever. And it's a very famous painting by Lady Butler, and it's the painting of the Scots Greys, the Royal Scots Greys, part of the British Army Heavy Brigade of Cavalry, in their charge at Waterloo. It's been done for historic, but mainly also for patriotic purposes. It's very exciting, it's very dynamic. Here's this charge with these massive grey horses and big men with bearskins on, charging towards you. Well, the real story is slightly different. In fact, this is not a painting of the Royal Greys, the Scots Greys, charging at Waterloo, the Battle of Waterloo, very famous. In fact, it's a recreation of the charge of the Royal Scots Greys at Waterloo, which was staged for Lady Butler some time after the actual battle was over. And actually what happened with the Royal Scots Greys was something entirely different to what the picture is presenting. That often happens in trading as well. So I thought it was a great opportunity to tell you a little bit more about that story, and maybe make a point of how you should be approaching your trading. Now, let me see how I can get this thing to change. I think it's over here. Here it is. So the Battle of Waterloo was the culmination of Napoleon's reign as Emperor of France. This was his second coming, if you like. He'd been banished some years earlier and taken to a little island in the Mediterranean called Elba, and he was ensconced there under guard, supposedly by the British commander of that island, and he escaped and got back to France, and then started his second coming, which was referred to as his 100 days. It's an extraordinary story. It's an extraordinary story about an extraordinary man, because he landed incognito on the French coast. This is after he'd escaped from his first imprisonment in Melba, with a very small force with him. They were made up by what was called the Old Guard, his most loyal followers that had followed him into exile. That was about it. And he started to march towards France. The king had been, the monarchy had been restored in France by the Allies, Britain, Prussia, Russia, and Belgium. The monarchy sent various forces to stop him marching on France and to arrest him again. And every time this happened, Napoleon simply presented himself, opened his greatcoat that he's wearing, and said, "Here I am. If you think I'm the enemy of France, shoot me." And they didn't. In fact, one after the other, these various groups of the French army, swapped sides and joined Napoleon, who they loved. His man had always been very, very popular with his troops. One of the most successful, innovative, and dashing military figures in world history, and a wonderful, wonderful story that he gets back to France, and the monarchy's fled again by this time, and he puts together an army of all his old stalwarts, and in that 100 days, he restores all of the Napoleonic features to France, and marches northward to give battle to the combined Allied armies that are sitting up there waiting for him, with his belief that if he can defeat them before they have a chance to all get together, that's his only hope. And that's, in fact, what he does on this campaign that finishes up with his defeat at the Battle of Waterloo. On the other side of the armies, you've got Arthur Wellesley, who then becomes the Duke of Wellington. And he is a long-time soldier and becomes a statesman. The painting of him on the right in the red jacket is actually done while he is Prime Minister of Great Britain, and he serves 2 terms as Prime Minister of Great Britain after he's finished with his army exploits, which went for many, many, many years. In fact, he first found fame in the India campaign, where his older brother, was the governor of the northern parts of India, and Arthur was leading the British Army, which was really pretty much a sepoy army made up of local Indian enlisted men, fighters, and he was very much responsible for defeating the largely Mohammedan were the major threats. These were Muslims tribes that had come down from the north and taken over the northern part of India. And he defeated them over a period of years, many battles, very famous battles. And then he returned to England, and he had a long time as commander of what's called the Peninsular Army that was fighting basically out of Portugal against the French, who had infiltrated and controlled Spain. So this painting of him on the horse, of course, is a depiction of him at Waterloo, and it was a famous battle, a huge battle, and interesting for a number of reasons. The most important of which is that it was the end of Napoleon as a political force, and pretty much the end of France as a serious military force for many, many years thereafter. So this Battle of Waterloo, 1815, long time ago, and there's a bit of writing here, folks, and I've quite happy to tell you I've copied most of this from either the Encyclopedia Britannica or Wikipedia. But this is what culminated in the 100 days of Napoleon's restoration. And Waterloo is a little village 9 miles south of Brussels. And important what happened at the time is that Belgium had quite recently been created as a new country with its own monarchy. And that's the reason, if you ever go to the site of Waterloo, you'll see this giant monument that the Belgian government put up, which has quite destroyed the nature of the battlefield, because they've graded up so much, huge amounts of soil and land and rock and everything else to make the Belgian monument, which quite dominates the battlefield, although they were actually represented in a fairly small way. But the British Army was made up, it was a conglomerate of British forces, Dutch, Belgian, and some very, very good German cavalry units. And there was a separate army there as well, 45,000 of them, the Prussians, and they were commanded by General Blücher, who was a wonderful old man. He was well into his 70s at the time, And 2 days before the Battle of Waterloo, there'd been an earlier battle at a place called Ligny, and he'd been unhorsed and rolled over a couple of times in a cavalry charge, but he was so tough he got back up on his horse and kept commanding the Prussian army, which eventually joined forces with the British late in the Battle of Waterloo, and that was the main forces that overcame Napoleon. It really was the arrival of the Prussian army, which attacked Napoleon on his flank as he was engaged with the British army at his front. So the Royal Scots Greys, they were a cavalry regiment of the British army, and they were famous for their grey horses. They all had these wonderful, majestic, marvellous-looking grey horses, and they were called at that stage the Royal Scots Dragoon Guards, and they were one part of the heavy brigade that was of cavalry that was at Waterloo with Wellesley, or Wellington, as you might prefer to call him, and the other two parts of the brigade were the British Royal Dragoons and also the Inniskillens, which was an Irish regiment. This is one of the stunning photos that period. Before photographs, of course, they were paintings. And this is a painting of Sergeant Charles Ewart of the Scots Greys capturing the eagle of the French 45th Regiment, a very famous moment in military history. Gives you a bit of the flavour of what was going on there. So Wellington at this stage, or Wellesley, I think we should more properly call him, was a cynic about cavalry. He had more army fighting experience than almost anyone in history that we can think of for many, many years. But he was very skeptical of the cavalry. And the cavalry, of course, were wonderful, wonderful. He had these magnificent horses, largely bred in Ireland, specifically bred for the army. The Greys were specifically bred by a number of breeders, and the other army horses likewise. But this is actually a painting of one of the, I think he's a colonel in one of those mounted regiments of the Scots Greys. And Wellington himself, as I say, was very sceptical of the cavalry because he'd seen so often that they got out of control. And this was a period of great individuality, massive esprit de corps, whatever else you'd like to call it. And what happened so often, and as Wellington had seen so often, is in the heat of battle, the cavalry tended to do their own thing. And the Scots Greys, who are the centrepiece of what we're going to talk about with the Waterloo campaign, were very much part of that comment as far as Wellesley was concerned. In fact, he said they were the best mounted and worst led force in the army, referring to his cavalry at large. And their leaders, of course, were, this was a period of great privilege in British society. Their leaders were people who'd inherited titles, who had the financial clout to buy their commissions, and they were the opposite of what we would call today a democratic and merit-driven rise. But nonetheless, it produced some amazing, wonderful soldiers, gifted soldiers, very brave soldiers, no doubt about that. And this wonderful, wonderful cavalry, part of which this particular regiment was the Royal Scots Greys. And they, on the morning of 18th of June, they found themselves in the third line of Wellington's army on the left flank. And remember that this Battle of Waterloo takes place in a valley, and there's a ridge on either side, and they're not terribly far apart. In fact, this is a very, very small battlefield because the two ridges and the lower ground between them comprise the boundaries of the battle by and large. As well as that, of course, you've got the Prussians retreating after the Battle of Ligny in a parallel course. They're pulling back north, and they come across, they manage to get across a dangerous river there eventually, and they come to the aid of Wellesley's forces, as had been agreed. And it's that attack on the flank of the French that finishes off the Battle of Waterloo, when the British pretty much seem beaten. In fact, Wellington himself says afterwards, it was the nearest run thing you ever did see. So his last moment, he said he prayed for night or the Prussians to come, because he was getting well and truly beaten by this wonderful French army. Remember, Wellington's army was not what it used to be. This is not the old Peninsular Army that had been so efficient and all-conquering in his previous command. The vast majority of those regiments had been sent off to America to fight in the American Revolution. So of the 40,000 odd British soldiers that he had there and the Allied soldiers, very few of them were really battle-hardened, seasoned warriors. Some of them were pretty iffy. Remember that the Belgian troops, who were still wearing French uniform, had been part of the French army a matter of only a year or two before the foundation of Belgium. Excuse me, searching for too many words, of Belgium as we know it. So what happened here was that the cavalry had been held back, and the Royal Scots Greys in particular, they were the third line of cavalry, and they were actually ordered to stay in line. And what they did is they ignored it. And to start with, Uxbridge, who was the commander of the cavalry, ordered the Union Brigade, that's what it was called, that's the British Inniskillens and the Royal Scots Greys combined in the Union Brigade, ordered them to attack the French infantry of d'Erlon's corps, and the Royal Scots Greys were told to hold their ground. However, just after 1:30, Lieutenant Colonel Hamilton, who was commanding the Royal Scots Greys, he saw the Highlanders falling back in disorder. And they were the Gordon Highlanders. And in that painting of the charge of the Scots Greys at Waterloo, if you look at the original, or just as good on the internet, have a look at that painting. It's called Scotland Forever. You'll see some men in kilts who are charging with the cavalry. They're holding on to the stirrups of the cavalry, and they were the Gordon Highlanders who'd been fighting, attacking the French, and were getting beaten. They were being beaten back, and that's the reason that Hamilton launched the Scots Greys, who walked right through the remains and the disordered number of the Highlanders, who, given some new hope and new purpose, turned around, grabbed the stirrups of the Scots Greys, and charged with them back into the battle. So, while this gallop, you expect a charge to be at the full gallop. The Scots Greys charge never got to the gallop. In fact, most of it was walk or maybe trot, because there'd been massive rain the day and the night before, and the ground was sodden, and it's beautiful, beautiful agricultural ground, that country. When it gets wet, it gets really wet. And between the land itself being so chopped up and being littered with bodies of the French and the Highlanders, they never got into a full gallop. But they described later on as being that they walked through the French corps, but they certainly went in a bit faster than the walk, and they caused immense damage. They sabred them, the men, unmercifully, and stopped that charge or that march forward of d'Aulon's corps entirely. So what happens then is that the Royal Scots Greys in particular, and some of the other cavalry, they get totally out of hand. They've charged through, a slow charge, but nevertheless a charge, through the French infantry. They've killed many, many, many men. Their blood's up, they're out of control, and their officers as well are screaming, on to Paris, on to Paris. So they continue the charge. They've done the job they were there for. They should have then fallen back behind their own lines and reformed, but they don't. They go on with this mad charge because their blood is up and no one's going to stop them. And they charge all the way through, right up to the gun line, which is where all of Napoleon's wonderful cannons, Le Bon Field, my little girls, as he called them, were waiting, and there were over 200 of them, and they sabred any of the crew, the gun crews that were still there. They charged up and down the line. They banged their swords on the barrels of the heavy weapons as frustration, but of course, because they had been so disorganized, they hadn't come to charge the French guns. They finished up charging the French guns, but it was not part of their plan, and they were hopelessly disorganized. In fact, they were so disorganized that not one of them had brought with them the necessary equipment to spike the guns. It was very common in those days that certain members of cavalry and infantry troops were tasked with carrying some sprockets made out of very soft beaten copper. And if you put that into the touch hole, remember these cannons are fired by a flame over their touch hole that ignites the powder inside the barrel. And if you bang one of these copper, what are they, like a little cone perhaps to look at them, you bang that into the touch hole, that disabled the weapon entirely. And all of the line of cannon could have been disabled if the cavalry had this as part of their plan when they'd have had these copper mallets, copper plugs, I think is the right word, and hammers to bash them in to the plug hole and disable those cannon. Well, they didn't have any, because this wasn't part of the plan. This was just on and on, huge emotion, huge excitement, and they couldn't be brought back under control. Eventually, they're milling around there. They've lost their leaders. They don't know what the hell they're doing. In the meantime, the French were the opposite. They were very well organized, and they had some cavalry in their cavalry division in order. One of them was the Lancers, very, very good cavalry. And the French cavalry charged them from the side, charged the Greys and the rest of the British dragoons that had gone on this wild rampage, and wiped out half of them. And there was the message for all time that if you lose your clan, if you're going off full of emotion, full of antagonism, full of hubris, none of these are good things for trading. And a little story here that Ponsonby tried to rally his men. He'd actually been captured, and a nearby party of Scots Greys saw him and attempted to rescue him. He was their brigade commander, and the French soldier who captured him killed him straight away, and then used his lance to kill 3 of the Scots Greys who'd attempted to rescue him. Amazing. And the commentary finishes up by saying that the remnants of the Scots Greys retreat to the British lines. Those of them that are still alive, harried by French cavalry, they eventually reformed, supporting the rest of the line as best they could with carbine fire. They were an unusual regiment. They had carbines as well as sabres, but in all, the Scots Greys had 104 dead, 97 wounded, and lost over half of the horses when they were finally returned. So the attack through bravado, the charge through bravado, unplanned, planned, no longer controlled by their officers, decimated, more than decimated. Decimated means 1 in 10. This was like 1 in 2, 50% or more than 50% of the horses killed, and 200 plus of the men either dead or wounded, unable to take part. So this tells you the need to have a trading plan, and as long as you've got a trading plan, you know what your boundaries are and stick to it. And there's an element in here that you need to personalize a trading plan. Of all the people I teach, they all finish up doing something slightly different. They personalized it for what suits them. But to personalize your trading plan, you do have to personalize it. You need to take all this stuff from Danielcode that I can teach you, or that you can learn from our video series, or from the website itself, and you have to make it so that it's yours. You've got to feel that proprietary sense of ownership. Sort of things you've got to think about. What's the type of trading you want to do? Is it long-term or short-term? Are we talking daily bars, or are we talking more frequently than that? So how frequently do you want to be in the market? And many trading ideas you'll find come with a warning about over-trading. And excuse me, this caveat comes from some of the most respected folks in the industry. Unfortunately, that is actually code for my system sees limited opportunities to trade. The vast majority of the trading programs out there are optimized around a particular pattern or a particular sequence, so it doesn't get to trade a lot. And these sort of comments of you don't want to be over trading, a very famous teacher told me, 2 or 3 times a month is plenty for you. You don't want any more trading than that. That's actually code for my system doesn't know what to do. In other words, it's a highly optimized trading method based on one or more market patterns. And that's entirely different to what we do. What we do is that we have a range of products that go from daily trades all the way through to learning to create and trade Danielcode time signals, where you're in the market almost all the time, all the way up to our latest thing, which we call Beyond Masterclass, which actually came from some momentum studies that I've been doing over many, many years. And interestingly, that momentum study showed that the true position of trend change is much, much further away than we thought, and certainly much further away than I thought. But the Beyond Masterclass, and Masterclass is what we teach, the full Danielcode, we call that Masterclass, the full Danielcode trading tutorial. Beyond Masterclass is really a ancillary product. It's a method of utilizing your time trading to hold on for longer periods and to capture those really super big runs that do make such a huge difference to your equity balance. So the most common comment I get from folks is, I want to trade the S&P in gold. Well, that's your first mistake. There will be times when you should be trading the S&P in gold, and there'll be times when other markets are far more attractive. But all futures contracts and Forex trades, they trade exactly the same on Danielcode. There's no difference. If you ask me to teach you about trading Forex, I'll probably start off showing you a gold chart. if you tell me you want to learn only futures, I could easily show you a Forex chart. They trade exactly the same on Danielcode. Now, both proprietors, in fact, all proprietors of these various markets, people who are supporting them, trading in them, teaching trading in them, they are always anxious to individualize their own product. So with Forex, a tick is called a pip, like a pip out of an orange. It has pips, doesn't it? Well, the smallest amount that a market can move in futures is called a tick, T-I-C, and in Forex it's called a pip, P-I-P. There's no reason for that other than to try and distinguish it from futures. To say, this is a different product, we're a different market, we have different people and different policies and different ideas, which is actually wrong, because Forex and futures, in fact, all markets are simply the sum of the emotional status of the participants at that moment. Participants feel good, think the economy is going to get better, think Trump's going to launch America into a golden age. They're buyers, they're optimistic, they think this market's going to go up. The opposite side, when something less attractive is on the horizon, they're sellers. They've lost that optimism. So that's exactly what market bars are in all markets. They are the measure of the emotional quotient of the balance of the traders in that market at that time. Okay, so thinking about gold and silver, which we're going to go back to. With gold, the story lately has just been immense, hasn't it? They're the most commented market. They have an endless comment all the time, and that makes them the most complex markets. The very best trading markets are those with little daily comment. Some of you way back will remember when I first started covering palladium, and no one had heard of the palladium futures market. It used to trend for days and days and days. But as these markets get more external commentary to them, different flows, different information, different emotions, so they become more complex. And some markets are by their own nature more volatile, particularly as an example, the energy complex, oil, natural gas, heating oil, gasoline, etc. Other markets are much, much smoother. Think of the grains as one of the smoothest markets. If you're new to trading, you should be thinking about trading grains. So what you'll find at Danielcode, you'll find daily trade signals in our TO3 and TO3 Plus offering. You'll find a largely time-based strategy in our Success program. You will learn how to create and trade price signals the Danielcode way with Danielcode time targets, and you'll learn to create and trade time signals, which is the big kahuna. These chaps very kindly, I should say, clients of ours, who are happy to talk about their experiences. They're talking about 400, 500, 600% and more in their paper trading. I should say Mark L is not with us today. Mark L kindly sent me an email saying this is the second Danielcode webinar I've missed, but he has gone to be with the family, of course, on Thanksgiving. So that was fine, Mark, and you'll catch up pretty soon. So then on top of all of that, we have daily trade signals with a specific entry, initial protective stop, and exit first profitable close. This is the shorter term stuff. This is the simplest and most straightforward method of trading, and it's very, very attractive to people to start trading. And the reason it works so well is that you're only in the market for a very short time, 1 day or a day and a half perhaps. But if you go past that time period, you have to have an understanding of trend, and you need to understand trend to stay in a trade for a longer period. And it's a vital skill that we teach. We have a number of different methods that will show you how to do that. So have a look again at this chart, folks. This was shown to you. You can see I've copied it. The U for understanding has been lopped out. And I showed this to you at the webinar on October the 3rd. It was called Violence and something else. And I showed you this chart and said, this is the start of a medium trend change in the US dollar index. So what does a medium trend change mean? Well, first of all, it's obviously different to our daily trend change. But what actually happened with this, and it doesn't happen with every medium-term trend change, but it did with this one, is it kept going and it kept going and it kept going. And as you can see here, this is what's happened since then. So there was your entry signal on September the 27th, was a standard Danielcode time signal to buy, and you can see this thing's run up $5,500 in two big waves up since then. So this is what you can learn from Beyond Masterclass. You can learn how to hold those trades, which means you'll be avoiding the 1 and 2 day counter trends that are so prevalent in our normal day trading. But to ever get a grip on Beyond Masterclass, you do need to be fully cognizant with Danielcode daily time trading signals. That's the basis. This is simply an extension to allow you to hold these trades for longer. However, it is a certainty that if you want to hold trades longer, you're seeking more profit. You can't do so without incurring more risk. So this is just a little note about the static trading, the exit. This is your TO3 and TO3 plus signals, and they're all counter trends at the time of entry, and that can change with as little as 1 bar. So you need to be thinking about probable trend when you put your order on and probable trend at the end of that day, because often enough you'll have seen a good argument for a change of trend, which moves you on to hold that trade a bit longer. So our new Teach Yourself to Trade video series, which we launched recently, is going really well. One of the things I've found is that folks who are doing particularly lesson 4, which is creating and trading Danielcode time signals, they need a little bit of help. And I've had a couple of them. I've said we'll have a chat after you've done that, finished working on that particular video. And I said I wouldn't do that, but I am doing it. So if you're interested in doing the Danielcode video series, yes, we will have a chat, no charge to you. We will have a chat after you've done your complete study and series and have a series of questions lined up. Happy to have a chat and make sure, of course, our aim always is to make you the very best, most efficient traders in the world. And if I can help by having a chat to you, I'm more than happy to do it. This is under that Teach Yourself to Trade banner on the Danielcode website, www.thedanielcode.com. We have 4 videos. The first is from Mark L., who's been a wonderful Danielcode stalwart. The second one is from Amy and her partner. And the third and fourth are both by Justin, and I'm about to add another one for Justin. And Justin has done so much paper trading for us and so generous to share his discoveries and things he's noticed in a very, very well organized, I should say, and scientific way that he gives us the statistical breakup of all these various markets. And one of his wonderful statements is in video 4, I never had a losing year. And he says he's done over 100 years of paper trading. Well, he doesn't mean he's Methuselah, but the markets he's paper traded, and he says he's traded pretty well all of them. He's paper traded them for 1 year, 2 years, sometimes longer. And if you add all those years together in the different markets, including Forex, including commodities, including precious metals, including equities, all of them, he said he never had a losing year. But what we're now going to add will be video number 5 when Terry comes back. Terry's on leave at the moment. We'll be back in a few days, I gather. The video number 5 is his detailed analysis of the counter trend moves where we're using what we call our discretionary trailing stop, which is how we deal with trades that are against the apparent trend. And he has, Justin has gone back over, I think it was 5, 6, maybe even 7 months of intraday data that he's been saving, and he's tested the various entries and stop loss regimes and come up with some really, really worthwhile information, which you'll be able to see soon after Terry gets back and we get that next video up. So the Danielcode tutorial, folks, if you really want to learn yourself how to become an elite trader, take the Danielcode tutorial. We now have 2 streams of trading. One is where I teach you myself personally. This is what we call masterclass. It will teach you everything worth knowing about trading futures and Forex. And you can see the wonderful comments here from Mark L. And also from Greg Palladini, who's a wonderful, wonderful supporter of the Danielcode, and so generous to share his observations with us. For those of you who are interested in what Greg had to say about doing his time trading tutorial, go to the forum tag in the Danielcode website, look for the thread that's headed Danielcode tutorial, Danielcode trading, something like that, by Greg Palladini. And what he said when he came back to do a second tutorial to learn how to trade, create and trade Danielcode time signals, he said, I'm going to take everything I see, everything I learn, and I'm going to post it on forum to help everyone else who's interested in following my journey, which was tremendously, well, generosity is hardly a good enough word, is it? I mean, it's so much work, and to just share it with all of us was a wonderful thing and incredibly generous. So the Teach Yourself to Trade video series, there's 4 of them. They're all about an hour to 90 minutes. None of them are longer than 90 minutes. The first one you can see teaches you about the Danielcode, what it is, where it comes from. It creates the Danielcode price and time levels, and you'll do that on your own, in your own time, in your own place. And because these are video recordings, once you've bought them, you have them forever. You can go back over them as often as you like, whenever you like. Lesson number 2 teaches you about trading price. And lesson number 3 goes on and teaches you the various methods we use to determine trend and adds a few trading tricks. Determining trend is vital for both your price trading and your time trading. And lesson 4 teaches you how to create and trade the Danielcode time signals, which is the safest and most profitable trading method that I know of or have ever seen. This slide is a little hangover from our previous webinar talking about dynamic trading and how creating and trading DC time signals allow you to be in the market almost all the time. And you can see that once you've done that, time is stronger than price. So time trading doesn't specifically need target recognition, but all markets are ruled by the Danielcode time and price ratios. So quite inevitable when you're doing your time trading, you'll be acknowledging the Danielcode targets. And for some of you, you've learned how to merge the 2 of those things together. So this is a chart I showed you a bit earlier. This is a US dollar index from the webinar October the 3rd. And the word that's missing, you can see it's cut off. It's actually said medium trend change, new trend, new medium trend change. And that's directly from our momentum model, which we call Beyond Danielcode. And you can see it just creates so much more profit. You can see these 2 big runs up have created 5,500 between them, with one counter trend and a current one now. But for Greg, if he's with us, I'll reply to your email shortly, but greater profit requires greater risk. To acquire this greater profit, it means you've got to move your stop out of the way. So we're not using a 1-bar stop. We're not using a 2-bar stop. 2-bar stops are very, very effective. They're the most popular stop that's used by everyone. And for the most part, they're very effective, but they're so common that they've become a target in themselves. And often enough, you'll see the 2-bar stop taken out and the market just turns around and snaps back. So we have to create, we have created a number of different stop loss protocols that give you an appropriate level of protection while allowing the market to breathe in and out. And we've identified, most importantly, the conditions under which all of these trends start. They can't start without creating a particular pattern, which is what you'll learn in the Beyond Masterclass course. And you do need, I repeat, you do need to be really fully understand your Danielcode time trading before you move on to Beyond Masterclass. So if we knew there was a new medium trend in DX, which I told you on the 3rd of October, what are the questions? What does that mean for gold? What does that mean for silver? What does that mean for Forex? Always think of correlations which sometimes reverse. So gold and the US dollar, with the dollar needs another L, it hasn't been picked up by the spell check, for which I apologize. They have both a direct and an inverse correlation. And recently, gold has been in a direct correlation with the US dollar predominantly. But historically, vast periods of time, in fact, the majority of time, the US dollar and gold have an inverse relationship, which means dollar up, gold down, dollar down, gold up. Very, very striking. I've shown that to you over the years many, many times. However, you've got to remember, it has hidden inside it the memory of a direct correlation and the memory of an inverse correlation. And if you saw that and thought about it, here's COMEX gold. This is just what happens on a straight sweep of Masterclass, Beyond Masterclass. Pretty nice, 24, 30 odd $1,000 in 3 trades, pretty much through there. This volatility all starts from the breakout in the US dollar index, which is why you need to know this stuff. This is the Aussie dollar USD, and I've marked October the 3rd. This move in the US dollar index started October the 1st, September, late September, 2 or 3 days before that, and you can see the down move in the Aussie because that's US dollar strength, massive. Now, I do want to point out to you that Trade Navigator have changed the values they're putting on their Forex charts. There used to be the proper amount, the real amount. It's no longer. Apparently new platforms, which I haven't seen, allow you to set the dollar value for any chart. So what they've done, they've defaulted every Forex chart to $1 per tick, which is not correct, but that's why they're doing it. And you'll see that all of these subsequent charts I show you, which are all US dollar centric, they're all showing this $1 a tick, I should say, a pip, even better. For you Forex guys, in case I'm misleading you, it's $1 a pip. There you are. But you can put your own values on that. This is just to show you, once you saw that US dollar medium-term breakout on the Beyond Masterclass analysis, this is what you should have been thinking about. It's going to have a huge effect on Forex, and it does. And still more, this is the cable, the British pound against the US dollar. They call it cable. And big trade down, 634 pips. They call it pips. They're very politically correct at Trade Navigator. This is the Kiwi, the New Zealand dollar against the US dollar. Big move down. 435 pips. If you didn't get all of it, you certainly got the vast majority of it. You needed to understand Beyond Masterclass to be able to sit through that correction. And I'll be honest with you, I didn't. I trade the Kiwi and the Aussie course quite often because they're a particular interest to me, and I took some profits when that market started to rally, and dashed in again when it went past the failure point. This is the US dollar against the Canadian dollar. This is called the Loony, L-O-O-N-Y. It's the Canadian official bird, and that's what they call, what traders call, the US dollar Canadian dollar pair. It's called the Loony. All these things have their little names, don't they? You have the Aussie and the Kiwi, and you have Cable, Euro, and the Loony. Very good stuff. All of these tradable properties here should have been ringing alarm bells in your head the minute you saw that post that said medium-term trend change. Excuse me. However, have a look at this. This is creating and trading Danielcode time signals on gold. And there's something about $36,000 per one contract just in this reasonably short period of trading, which actually starts back in October the 9th. October the 9th is that little inside bar that triggers the first up buy signal. So that's October the 9th. This is just using the Danielcode daily time signals. This is not using Beyond Masterclass. So you can see that we've got stopped out of the various counter trends. I put a little cross on them to say fail. They haven't failed by much. One of them's actually made money, the bigger bar down, but they have been occasions that we've got out of the market and then back in. So if you wanted to be trading gold recently, you're in exactly the right place. Have a look how this thing's moved from correlated with the US dollar index to back to the inverse correlation. And what does it? Have a look at that TO3 and blue line sell signal at the high. We had a blue line there at 2824.8. Now that had been on the chart for literally weeks. The market found that, stopped the close. Remember, target recognition is valid at a bar, high, low, or the close. Closed exactly on that number. I don't think I'm exaggerating. That close was 2825.7. 2825.7, that's 9 ticks variance. Amazing. Unbelievable. Back in the day, we used to allow 11 ticks variance. Of course, this market's more than doubled since then. So we now allow closer to 30 ticks variance. But what hasn't changed is the market still keeps finding these turns within 11 or 12 ticks, exactly as I started to teach this stuff back in 2014 or so and before. Wonderful market, wonderful piece of trading. Danielcode time signals. You're in the market almost all the time. And if you can be getting anything like these sort of results on gold, you will be trading at a very, very elite level. And to do that, we can teach you all of that. So learn to trade the Danielcode time signals. Creating and trading Danielcode time signals is glory in itself. We started off talking about a charge to glory. You are capable, if you've been with Danielcode, if you've done the Danielcode courses or learnt from the website, you are capable of creating glory yourself. There is glory in knowledge that you have traded immaculately. There is glory in knowledge that you are trading at a level that no one else is or very few have ever seen. There is glory in doing a job perfectly. And you have the opportunity of doing that yourselves right now. And if you want to join that cadre of people who are capable of doing that, let me know. Take one of our Danielcode Teach Yourself to Trade or Learn to Trade courses. Both are available. Go to the Danielcode website, www.thedanielcode.com. and have a look. You'll see all of the available subjects there. If you have questions or you want something in particular, give me an email. jneedham@thedanielcode.com. jneedham@thedanielcode.com. If you have an @Yahoo email, please include your phone number on the initial email. We're still finding that if I reply to your emails with the email, press the reply button, it will get through. If I start a new email without that, it gets returned to me 2 or 3 days later, which is enormously frustrating because I know you're asking me to do something, to teach you something, to answer a question, and you don't get a response. You think, what's wrong with this guy? He hasn't replied to me. I had one even write, say, you guys still in business? I've sent you 3 emails and you haven't responded. Well, of course we responded. I reply to everything. But if you're at Yahoo and my emails keep getting returned to me, it unfortunately can give you the impression that we're not on the job or that we don't care. Neither of which of those two things are true. So, folks, if you haven't already had a free trial, please go ahead and have a free trial. If you've already had a free trial sometime in the past, the computer will probably remember you and won't want to give you another free trial, in which case contact Terry at support@thedanielcode.com. Tell him you've already had a free trial but you'd like another one. Tell him what you're doing, what you're aiming to do, and I'm sure he will be happy to help you. Finally, here is our disclaimer document. And it's important for you to understand that it is very easy to lose money trading futures and Forex if you don't know what you're doing. Very easy. In fact, 90% of new traders lose their bank in the first 90 days. That's the official statistic. I think 99% of new traders lose their bank in the first 30 days, some in the first 10 days or less. The good news is once you know how to trade, it is equally very easy to make a lot of money trading futures and Forex. The main thing is get yourself educated. Come to the Daniel Code. I will teach you. Or if you prefer, you can have the Teach Yourself to Trade videos, which you can learn from in your own time, in your own privacy of your home. Office or wherever else you are. And that is fine and grand to have had you with me today, guys. I know the vast majority. Bob's with us Rob, I should say, over in New Zealand. Wonderful to have you with us, Rob. I hope you're well, my friend. Thomas is with us, his new guy here. Trevor, of course, he's a wonderful supporter. Mike, who's a Kiwi, that particular Mike's a Kiwi. We have many Mikes. He's a Kiwi. He's doing a tutorial for the second time. He did a live tutorial with me in New Zealand many years ago, and he's come back to do the TTT course. Joseph's with us. He's doing a Daniel Code tutorial at the moment. Adrian's with us, of course. Wonderful. Mate, how many of you managed to turn up today? Joe's with us. Absolutely wonderful stuff. Who else we got here? Oh, Justin's with us down in the Hunter Valley. Hello, mate. Good to have you with us. Melissa's with us. Melissa, I know your brother very well over the internet and of teaching, so I'm delighted that you're with us, and I hope you're enjoying it. And Adrian's with us, who is doing a tutorial right at the moment with his next lesson on Friday. Adrian, I'm glad you enjoyed it. And thanks, Rob. Just beside the pool and have a Bloody Mary is exactly what I intend to do, mate. It's got very warm over here in the last couple of days, and that's exactly what it needs. Joe's with us, John's with us, lots of Peters are with us, Gabe's with us over in California. Grand to have you. Many people, much more than I thought today. Thank you for being with us, folks. Hope you've enjoyed this. The video will be available on Sunday, I believe, and I'll have this question of the screens sorted out in the next 24 hours. My son tells me it's a really simple issue to fix. Take about 1 minute, and of course that implies that you know what you're doing, which when it comes to technology, I do not. I'm a Luddite, and I oppose all new technology, and I find it troublesome and burdensome. But anyway, life goes on. as we keep moving along the road. So that's me for the time being, folks. Thank you so much for being with me on this important Thanksgiving Day. For those of you who've been at your home, meeting with your families, enjoying Thanksgiving, I hope you have a safe and very, very wonderful Thanksgiving holiday, and I'll look forward to meeting you when we next do a webinar. Bye-bye for now.